Can we discuss potentially the COVID scenario and how it looks today, but more importantly, what the team's views are in the short term, and then let's shift over to the medium to long-term outlook.
I mean, obviously, we do need to be a little bit humble about what the potential outlook is here, because it is very uncertain. And so over the short term, it's fairly obvious markets have moved a long way fairly quickly. And a number of those capital protection tools may be required over the short term or over the medium term. Longer term, though, however, we would look at COVID and say that from our point of view, we'd look at it like any other structural change the fund has had to deal with over the last 15 to 20 years that we've been running money. Ultimately, COVID is a structural shift towards social distancing. And that social distancing has meant for the companies that we look at, and particularly in these digital industries, we see a digital acceleration occurring. And so the simple analysis we'd give you here is if we look at a number of the S-curves of adoption that we've been following for some time, and I'll give you one example being cash or cash to card. Card payments were roughly only 35% of all payments roughly 10, 15 years ago, and that's slowly risen to 60% over time. As we move forward in a post-COVID world, it's fairly obvious that the cash to card shift will accelerate, i.e. cash will disappear much quicker than we previously thought. The other obvious area would be somewhere like e-commerce, where e-commerce has been slowly taking share from regular commerce. And so from our point of view, we would actually see that e-commerce share accelerate. And the simple numbers we could give you is that it's taken roughly 20 years for e-commerce to go from 0 to 18% of retail sales. But it's only taken 6 months for e-commerce to go from 18 to 25% in the US. So it's added 7% of share just in the first half of this year. And so from that point of view, for a number of these key companies that are exposed to these areas, they have become truly unique. They are accelerating their share of a pie that's obviously not getting bigger, might be getting smaller, but their earnings are being pulled forward. And we're seeing that pull forward of earnings, which is basically driving these share prices higher. And from our point of view, that doesn't look out of place at this point in time. It may have happened a bit quicker than most people think, but it doesn't look out of place. And if anything, it's probably got further to run the longer this crisis goes on for.